A masterclass in pure deception today. In '92, Scott Bessent helped Soros break the Bank of England. Today, he is using those exact same psychological tricks to defend the Bank of Japan. Poetic financial justice indeed. But can psychological tricks really outmuscle interest rate math? Trillion-dollar currency markets do not care about clever tweets or notepad photos for very long. Gravity always wins in the end. Indeed, the yen's decline has already restarted. The rare U.S. intervention bought some valuable breathing room, but the underlying rate gap remains. The grand rescue is already completely failing today, sadly. This is a slow-motion economic train wreck. The U.S. is trapped, forced to print more money to protect its banker. The exorbitant privilege of the dollar is coming to an end. A sneaked photograph of a yellow notepad just exposed the global financial system. The United States Treasury is secretly spending billions of dollars, but not to save America. Something is breaking. This highly confidential list was snapped by a photographer with a long lens. It was sitting in front of Treasury Secretary Scott Bessent at Camp David. The secret was out today. Normally, your morning to-do list might include picking up some fresh bread or eggs. Bessent's official list simply said buy yen up to $10 billion, a costly shopping trip. Why on earth would the mighty United States spend its own precious cash? They are propping up a foreign currency sitting at a historic 40-year low. It is absolute madness. The official explanation from the White House was simple and incredibly sweet. President Donald Trump claimed it was a grand signal of pure friendship. We are just helping our mates today. But Trump could not help being himself during the press conference. He brought up Pearl Harbor right after promising eternal love to Tokyo. Classic diplomatic charm at its absolute finest indeed. Let us be completely honest with ourselves here. Superpowers do not spend $10 billion just because they are feeling friendly. There is always a catch in these backroom financial deals. The real story is not about international goodwill or lovely alliances. It is buried deep inside the American bond market, where a silent panic is currently unfolding. It is quite terrifying. To understand why Washington is sweating, we must examine Japan. The island nation is sitting on a mountain of debt so massive it would make anyone dizzy. It is completely unprecedented. Japan's national debt has reached an astronomical 250% of their annual GDP. It is officially the highest debt burden in the developed world. Absolutely mind-boggling, really. But here is the absolute kicker of a paradox. For 34 consecutive years, this incredibly indebted nation was the largest foreign lender to the entire planet. How is that possible? How can a country that owes so much cash also be the world's biggest banker? The secret lies in a very clever division of national wallets. Let us break it down. The Japanese people are legendary savers, piling up cash for decades. Their massive trade surpluses from exporting cars and electronics created a colossal ocean of private capital. It is absolutely staggering. Instead of keeping those savings under their mattresses, Japanese institutions went shopping. Their absolute favorite asset to buy was the sovereign debt of the United States government. They bought incredibly big. Today, Japan holds more than $1.2 trillion of American government debt. That is far more than China, the United Kingdom, or anyone else on Earth. It is enormous. This means Japan is not just an ally. They are effectively America's primary banker. When the U.S. government needs to spend, Japan is the one quietly writing those truly massive checks. But a few months ago, the banker ran into a crisis. The Japanese yen began to collapse, sliding toward a 40-year low against the mighty U.S. dollar. Panic set in. Why was the yen face down on the floor? Japan is a resource-poor nation importing 97% of its energy, and global energy is priced exclusively in U.S. dollars. When the conflict in the Middle East flared up, oil prices exploded. Suddenly, Japan's energy import bill became a monster, draining their national coffers at a terrifying speed. It was critical. To pay for this insanely expensive oil, Japanese businesses had to sell their yen. They swapped it for dollars, flooding the market with yen and driving its value off a cliff. This triggered a vicious, self-reinforcing doom loop. The weaker the yen became, the more expensive the next oil shipment was. It was a financial machine eating its own tail, indeed. By July, the exchange rate crashed past 164 yen per dollar. The currency was weaker than during the era of the original Walkman. Something had to give. Now, any basic economics textbook will tell you the solution. To save your currency, you simply raise interest rates. That attracts global investors like hungry moths to a flame. Very simple. But the Bank of Japan could not do that. If they raised rates, the government's interest payments on that mountain of debt would explode. They would bankrupt their own state today. Instead, Japan's central bank printed trillions of new yen every single month. They used it to keep interest rates artificially low. It was like pouring water into a leaking bucket, really. To defend the yen without raising rates, Japan had to sell assets. They needed to raise dollars to buy back their drowning currency on the open market. They needed heavy ammunition. And where was that ammunition stored? It was sitting in their massive stash of US Treasury bonds. Japan prepared to dump hundreds of billions of dollars of American government debt today. This is the exact moment America's nightmare begins. If Japan dumps $1 trillion of US Treasuries, the price of those bonds will collapse on the open market. It is disaster. When bond prices fall, bond yields rise. It is basic financial arithmetic. And those rising yields mean the U.S. government must pay much higher interest to borrow any new money indeed. But the pain does not stop in Washington. Treasury yields are the baseline benchmark for almost every single interest rate in the global economy. This affects everyone, including you in America. A collapsing yen in Tokyo suddenly transforms into a much higher mortgage bill in Ohio. Every single car loan and student debt in America gets instantly more expensive. It is brutal. America is already drowning in nearly $40 trillion of national debt. They are spending over $1 trillion a year just on their interest payments. They absolutely cannot afford more. A massive fire sale of U.S. bonds by their biggest lender was the ultimate financial nightmare. It would push American borrowing costs to a breaking point. Washington simply had to act. So, the United States did not bail out Japan out of pure charity. They did it for self-preservation. They had to save their banker to save their own skin today. In July, Treasury Secretary Scott Bessent executed a historic, desperate market operation. The U.S. joined Japan to buy yen, a coordinated move not attempted in over a decade. It was massive. But the mechanics of this bailout were incredibly cheeky. To buy the yen, the New York Federal Reserve did not sell a single U.S. dollar. That would look very bad internationally. Instead, they sold euros from a secret pot of cash called the Exchange Stabilization Fund. They used Europe's money to prop up Japan's currency. That is absolute economic genius, really, today. And the best part of this financial drama? The US Treasury did not even bother to tell the European Central Bank. They threw their closest allies straight under the bus today. Senior European central bankers were reportedly absolutely furious. They only found out about the massive trade after it had already cleared. Decades of strict diplomatic etiquette were completely ruined today, sadly. This was a highly deniable backdoor devaluation of the US dollar. On paper, Washington never ever sold their own money. They let Europe pay for their domestic stability. A cheeky move. But Scott Bessent did not stop with just buying yen. He quietly restructured the entire financial plumbing. He wanted to make sure Japan never had to sell U.S. bonds again, ever. He pushed the Federal Reserve to expand a little-known program called the FIMA Repo facility. It is essentially a high-end pawn shop for foreign governments. Truly brilliant work today. Japan can hand over their U.S. Treasury bonds as collateral directly to the Fed. In return, they get fresh dollars to defend the yen. And those bonds never hit the market. Why are they so terrified of a disorderly yen collapse? Because of a giant monster called the yen carry trade? It is the financial world's favorite source of free money today. Trillions of dollars have been borrowed cheaply in Japan to buy higher-yielding U.S. stocks and bonds. It works beautifully as long as the Japanese yen remains completely dirt cheap, really. But the carry trade is like holding a live grenade. If the yen suddenly surges, everyone must rush to sell their U.S. assets to pay back their cheap loans. Absolute chaos. We saw a brief, terrifying preview of this in August 24. A tiny interest rate hike in Tokyo sent stock markets crashing around the globe in a single afternoon. Shocking. Bessent is deploying brilliant psychological warfare to prevent that disaster. He is running the legendary Soros currency-breaking playbook, but in complete and absolute reverse. A masterclass in pure deception today. In '92, Scott Bessent helped Soros break the Bank of England. Today, he is using those exact same psychological tricks to defend the Bank of Japan. Poetic financial justice indeed. But can psychological tricks really outmuscle interest rate math? Trillion-dollar currency markets do not care about clever tweets or notepad photos for very long. Gravity always wins in the end. Indeed, the yen's decline has already restarted. The rare U.S. intervention bought some valuable breathing room, but the underlying rate gap remains. The grand rescue is already completely failing today, sadly. This is a slow-motion economic train wreck. The U.S. is trapped, forced to print more money to protect its banker. The exorbitant privilege of the dollar is coming to an end.
Thanks for watching. If you found this interesting, click like and follow.